Good afternoon, everybody. This is Stephen Wall, co-founder and head of marketplace and content at the Wealth Mosaic. Welcome to another one of our WealthTech Talks. Today, we are in conversation with Theo Paraskevopoulos, founder and CEO of a firm we know well called Invessed. Hello again to you, Theo.
Hello, Stephen. How are you doing?
Thank you for joining us today. So for those listening in, these are conversations, interviews where we're going to talk to Theo about his business Invest and its origins, the reasons for its founding, what it does, who it serves, where it's focusing in the market, and obviously with some of the things going on, I think Theo has a very interesting perspective on where wealth managers are with technology, what they can do to support, and some of the kind of changing dynamics that COVID has exposed. So we're going to have a conversation for 30-45 minutes. I'm trying to get a better understanding of Invest. So Theo, thank you again. So a quick introduction to the firm. What would you highlight? How would you highlight Invest to the audience and to those you want to service in the market?
Yes, thank you very much for inviting me. Invest is a digital experience platform for investment brands. We work with wealth managers, with fund managers, we work with private banks, basically any type of organization that manages investments money on behalf of clients. Digital experience, what do we mean by that? We mean all the ways that the brand interacts with his clients, primarily via digital channels with websites, portals, apps, etc. And what do we mean by a platform? Essentially, Invest is a toolkit, if you like, put simply, that our clients can use to build things, these websites and portals that I mentioned. Now, our service comes in two aspects. There is a technical component and there is a service component. The technical component are chunks of code, functionality, modules that can be combined, put together, cherry-picked to create the experience that you need, and a cloud architecture on which to deliver it. The service component is a team of professionals, project managers, designers, developers that will design the experience, customize it, maintain it going forward, etc. We operate on a bring your own data policy. We try to be as flexible as possible. And we typically connect to CRMs, data repositories, content management systems, etc. To be honest, Invest is about customer experience, is about that front end.
Yep. Great. Thank you, Theo. Interesting. I like the bring your own data concept. We'll come back to that again in a bit, as well as some of those other aspects. I know, having previous conversations with you, kind of interesting dynamic as to why the company was founded. Can you tell us a little bit more about the background and the rationale and some of what made you or brought you to bringing the business to market?
No, absolutely. So Invest was founded as a company in 2017 by myself and Adam Weston. The two of us are also directors at Grow Create, which is a digital agency based in Oxford and in Cologne in Germany. However, the story of Invest goes back to 2007, a good 10 years before the founding. And I mentioned the day because it was an important date for two major events that took place. The first one was the launch of the iPhone. Now, it might be hard for us to think about a world without mobile devices now, smartphones now. But in 2007 was actually when the iPhone was launched. And at the same time, or about a year later, was the financial crisis. We started as a credit crunch, and I had front row tickets for that, in the sense that I was in a meeting with the wealth manager, and just as the bank run on Northern Rock happened, everyone's BlackBerries at the time just went crazy, and they all had to bolt out mid-meeting through the door, going over to do whatever it is that they needed to do. But the point is that 2017 was a significant date. The technology of the iPhone and the development of the crisis created a push and pull factor that changed, I think, the industry forever. The iPhone was the push factor. We now had a device where customers could get personalized information, access to the portfolio at all times. No longer did they have to go to a computer to log in, to actually do the cumbersome things. All of a sudden, this customer experience, the digital aspect of customer experience became real, became ubiquitous, became ever-present on the move. And at the same time, it gave a pull factor. All of a sudden, the financial crisis created a demand for transparency and a level of control, because it painted the industry in a relatively, actually in a pretty negative light. It was a bank crisis after all. So those things came together. It took us a little bit of time. We launched the agency, and then we, a few years after the agency was launched, Invest started taking shape.
Great. Well, here's my iPhone. I think I've just got some notifications, right, just to emphasize. I don't think they're from wealth managers, but hey, who knows? So in terms of some of the developments you mentioned, the arrival of the iPhone, the impacts of the global financial crisis, and of course we're 10 years on from that now. In terms of the lifespan of the business, I know you didn't found it straight away. What can you tell us about some of the major developments since you've been in operation?
Sure. Well, the story will actually begin 2 years before Invest was spun out. So the first idea, the first time that we even came up with the name of Invest, was in 2015. And this was where, if you like, the version 0 of it was launched. At the time, we were getting, as an agency, many briefs from asset managers and wealth managers, and a lot of the projects that we were putting together had common elements. And so, like a lot of agencies do, we started seeing the similarities and started collecting the code for that into a code library. And they included things like charting and security and some of the data integrations. Basically, this became version 0, this code library. Now, 2 years later, the Invest was spun out as a separate entity, as an autonomous entity. Then the product basically coalesced into a recognizable application suite. Move forward another 2 years, and 2019, last year, we redeveloped Invest from that version over to what we call the cloud native solution. Essentially, we took the application, which at the time was mostly centered around user experience front-end components, and we married it up with a whole new set of technologies that now cloud technology will enable us to use. And we're talking about things like microservices. We're talking about shifting a focus over to data, to analytics. A whole lot of enabling things became possible because we were cloud native, as opposed to just an application hosted on the cloud. This year, we're seeing a culmination of all these developing efforts, and we have shifted our value proposition to rapid delivery. All these components, all these things we have put in place actually come together, and now we marry them up with a framework, with the delivery framework that allow us to deliver value very quickly. We'll be talking about later on about design sprints and an MVP, how quickly we can scale out to an entire customer base.
Perfect. As you say, we'll come back to some of those themes later. You probably touched on it, but in terms of your value propositions to the market, what is your short description of what you do and how you differentiate from maybe competitors in the market or others who touch on things that you do?
Yeah. Well, as I mentioned, in this year, our value proposition shifted from the technology aspect to the rapid delivery aspect. Our advice, our angle for everything is start small and build up. It is, if you like, a user-friendly way of saying be agile.
Yep.
Many benefits to this. Why start small and build up? First thing, of course, is satisfying customer demands. We hear it especially from people that work in marketing and customer services. We want this yesterday. Customers demand this yesterday. The need to have anything from the simplest thing, the valuations online, all the way to online meetings, integrations with Zoom or another online conferencing package, all these things. It's not something that can wait for a project. This is something that needs to kind of happen right now. And a lot of our customers are still stuck on the first generation portal that can be very rigid. Maybe it's just a file library. A lot of people just have a portal where you just log in and you have access to a number of PDFs. But the second, third generation would have a much broader functionality. And we need rapid delivery of that because of customer demand. A second driver, second suite of benefits for a rapid implementation is management buy-in. I can think of a number of projects which started with all good intentions. The project team, maybe headed by digital or marketing, they started collecting requirements, commissioned a prototype. It started going really well. And then at some point, management got bored. And that's because it takes time. if you start with a huge monolithic project that basically goes through that old waterfall approach of let's define it, let's design it, let's build it, test it, and release it to everyone, management tends to lose interest in that, because that third step I described, from the moment essentially that, oh wow, this is going to look great, to the moment of customers think look great, is huge because of the implementation cycle. So we try to bring in the agility in there because it keeps everyone interested. The last thing is, the last benefit of a value proposition is data-driven decisions. If you build something, a prototype, and you get it out into the market, onto real clients quickly, you start collecting data quickly. You essentially get to test your assumptions, and you get to make much better decisions based on that data.
Great.
So just to summarize, the value proposition is deliver value to the clients as quickly as possible, start small, and build up.
Perfect. And in terms of the wealth space, can you tell us about some of the firms that you work with or target? And I know you have a nice model in terms of categorizing the wealth firms you work with in terms of where they are in their journey. So what type of wealth managers do you work with? And more broadly, as well as the segmentation, where do you see wealth management in its digital journey from, the beginning to the end? Not that there is an end, right? We can't define that yet, but
exactly. There is no end game on this one. This is the journey is the destination. And talking of journeys, what you mentioned earlier, we do segment wealth managers and the clients that we work with into three categories, depending on where they find themselves in the digital transformation journey. You have got early stage companies, firms where they still are trying to launch a first generation portal. Maybe what I mentioned earlier, maybe they just have a secure document distribution element, but that's about it. I'm sorry. But also, one of the issues that they have is that they see data as one way. They create the data, then they send it out onto a portal. They don't have very many data sources to collect analytics from. It's a pretty simple proposition. For this type of clients, it's all about enablement. It's about, let's get something out there, a second generation, really quickly out. Maybe you only have got a website and with a simple login area. You need to build on that. Then there is the involving firms. Now, they would typically have got a second generation portal already. Maybe there is a mobile view unit, or maybe it is responsive. They're likely to have some analytics in there, but perhaps they're not making the most of it. Maybe they are logging in to see the analytics once every month, once every quarter. It is most certainly an afterthought, and definitely is not something that these analytics do not flow over to product design or to customer services. It's not linked to other parts. It's just there to help them optimize the platform. Now, the third segment, advanced firms, they definitely have got an advanced portal. They definitely have got collecting data from many different sources. Maybe they've got a dashboard. Maybe they even start experimenting with machine learning models, etc., to start driving insights from this data and letting it flow over to other areas of the business. The challenge with advanced companies is agility. It's about keeping it going. It's about being able to react to changes in the market, changes in management, changes in other aspects of the organization. And this is where we call to help. You mentioned earlier, where does the sector find itself? I would say it is a key challenge in the sector that too many companies, too many firms are still stuck on that early stage of the digital transformation journey. And I understand it. Wealth management, in part, is very much driven on personal relationships. So a lot of firms can do that because they have got a customer base that is built on these personal relationships. So maybe they don't see the value of going over anymore. Oh, we've got a website that looks great. We can leave it at that. I don't think that will stay like that for a long time. I think there is pressures and externalities in the sector that will influence that dramatically, and I'm sure we're going to talk about it later on. But I see that as a key issue. Not enough firms making the step to an evolution.
In terms of, I think you talked earlier about quick wins. So it's not about building Rome in a day here, right? You've got to start small and then you grow from there. So maybe across those three segments, but particularly the first ones where you see a lot of firms, they're still at the start of this journey or early in this journey, they're not advanced in their nature, or they're not advanced in their digital nature. So what can they do? What are the sort of things that you would recommend they do to move forward, maybe to break down barriers or to realize some quick wins?
Well, I think that from our point of view, it would be a case of, what we would advise, it would be a case of, first of all, by all means, taking stock of where you are now. We do not ever advocate throwing away what you have. We're saying start small and build up. So long as what you currently have, even if it is generation 1, is serviceable, use that and move on from there. At the very least, you have to look out for things like regulation and security. You have to tick out those boxes. If you find yourself sending valuations via email, you probably should move on from there because of security issues. If you have got trouble collecting, reconciling data in a timely way, you should look at that. So definitely there is a collection of processes that need to take place before you move on to customer experience. But at that point, assuming that you have got this base covered, that you should definitely start talking to customers. And the tool that we use to do that is we interview customers, we interview people in the business, and we use a tool called the customer experience mapping tool, where what we try to do is we create slices of touch points, so different parts of the customer experience journey, from onboarding to account management, account change, monthly reporting, any of these things are touch points, and then we plot in there the touch points that the organization must and wants to deliver. Anything from the quarterly valuation report, obviously the quarterly basis, usually it might go as a PDF. You plot that onto the reporting column, and then you see, how can we optimize that? What do customers want? Well, at first instance, they might just want a PDF delivered in a secure way, but most of them will want it in a way that it is searchable, in a way that it is a bit more engaging, a bit more animated. You start looking into the overall user experience, the digital user experience over there. And then, as I said, you start building from there, and you expand out over to one-to-one communication, publishing, etc.
Perfect. You mentioned, I think, externalities, so pressures on the industry for change. Obviously, we live in very interesting times now, and we've written some research, we've put out some reports, we've had conversations with yourselves and others about some of the changes. So I know you've mentioned your value proposition changing. When you think of your buying audience, can you talk a little bit about what you've seen change there in the last 3 to 4 months, given what is happening around us?
Absolutely. It is most certainly challenging times, and the impact to this industry, to all industries, is going to be profound and long-lasting, to be sure. What we're seeing so far is the short-term impact. The long-term impact will, I think we're going to talk about a little bit later on, but short-term impact, we are seeing obviously a pressure on assets under management. Markets are turbulent. Maybe people are moving things into cash, etc. Pressure on fees, and therefore pressure on budgets. So customer experience might actually be might kind of fall further down the line. It might be that we are beginning to see some inertia, some indecision when it comes to projects. However, at the same time, there is big demand from customers to do more and more things on the digital domain. So all the investment that a lot of the firms have put in place is now it's coming to fruition, and you kind of need to expand on that. There is one more challenge over here, and that is significant, is that the workforce needs to be adjusted. Now, it is easy for us, as a technology company, as an agency, it's easy for smaller companies to jump from everybody's in the office to everybody's working from home via Zoom and Teams all the time. But not all companies can make that jump so seamlessly. A lot of companies still have got internal networks that they rely on. They have got colleagues that might still not be using laptops. They might have all sorts of practical considerations. Now, this short-term impact is beginning to fade as most companies move on from that. But the challenges do remain. The cultural aspect of how you change from working from a collaborative environment that is based on physical proximity to an environment where everybody's distributed, that is considerable. And I know that because we as a company have been distributed for years now. So we've gone through that journey. All this is to say that there is a pool from clients who want more and more digital. There is also a different pool because they also want a high-touch approach. They all want to be reassured. Trust is a massive issue. At the same time, you have got challenges on the workforce, on your advisors, on the support, back office, front office, on your systems that you use. And it is a difficult period. And nowhere, we think, and this is why we adapted a value proposition to that, at no other time is the concept of starting small and building up more applicable than now. Especially when you've tied yourself in knots and you think that it's hard to start a project. This is where it becomes really, really important. What we do is we break up the proposition into, or the framework into 4 parts. Mm-hmm. One is a design sprint, where we kind of use design thinking, for those that have heard of the term, which is try many different things and fail easily until you find which broad direction your solution should be going. Anybody who has been to our website might have seen us talk about the digital fast lane and how we use the analogy of a car. Well, a design sprint is like setting your GPS. It's basically saying which way should we be going. Yep. We then move on to an MVP. It typically takes about 30 days to do that. This is where you test the ground. And this is where you pick the most important functionality and deliver it to your most important segment of your audience. And this is very thin, but it will allow you to actually deliver value very, very quickly. Then you start scaling up. You go wider functionality and a wider part of my segment, and you go wider and wider until you cover absolutely everybody. And then at the end, we kind of have got this process of agility. When going forward, you can meet change. You basically can put the infrastructure in place to deliver it, to be able to adapt to changes in the organization, changes in your market, to safeguard growth. So this is how we came to pivot from a focus on technology to a focus on rapid delivery to meet the needs of this challenging reality.
And do you find culturally, as a kind of analyst, sort of directory-led business, talk to a lot of vendors, and we hear these terms about MVP and agility and rapid deployment. Do you think they're widely accepted in the industry? Is the industry there yet in terms of acceptance, or is it still has a preference for more traditional models of technology, infrastructure, delivery, and design?
Not yet, but it's getting better. It's getting significantly better. I will relay this my own personal experience rather than in scientific research. That in the last year, when I talk about MVPs and when I talk about agile processes, etc., you mentioned continuous delivery and stuff, which is a deeply technical term. Things like that. At the very least, I do not ever have to explain what they are. Yeah. I think that by now they have become common terminology for most people in the digital space, to be sure. But at least everybody's familiar with that. And also, everybody's familiar that everybody agrees that this is what they should be doing, even if the organization further up the ranks is more traditional and favors a fixed cost. I need to know exactly where I'm going, and I'm not going to launch anything until everything is signed off with a word signature. They still know that actually we should be doing agile, but maybe not yet. So it's definitely changing. Yeah. But obviously not all companies are there, and there is a significant proportion of the early stage companies that still prefer to do things in a traditional way. We don't, from our perspective, from kind of an implementation and a system perspective, we're geared for that. We're okay with that, but it just doesn't give us the chance to really prove the value that this approach, this framework can deliver.
Have you seen, obviously, recognizing the times we live in and the pressures perhaps that firms face, they might have a patchwork of things to improve. Clients might be trying to communicate with them and they don't have the toolkit to do it. So when they're looking at design sprints and MVPs, and when they're talking to you about where they could go in terms of accepting agile development and moving things forward, is there a specific focus? I mean, are you seeing that the gaps are in this area, and that's where firms are focusing their conversations? I mean, is there any generic stuff, or is it very specific to each individual firm?
The focus is quite individual. There are, however, so the relative focus is very individual, but there are, to be sure, there are still there are patterns. There is common challenges that everybody faces. I started with that on the previous question, and maybe I'll sketch out a bit more detail over here. A common one is the data. Is getting the data correct, getting the data sourced from different systems. We have got customers that have got that need to source data from multiple custodians, multiple systems. They need to reconcile them. Customers want things in real time, but of course, real time is a challenge because of this networked nature of the data. So that is most certainly the most challenge, the area of the biggest challenge. This is why, from our part, I'll go back to the very beginning where we talked about bring your own data. This is why we put this strategy in place. Virtually every other vendor that will be on this conversation with you will have a data structure in place. They will have a data repository, they will have a data hub, a data lake, a data star, a data anything that they will insist on that needs to work. And we actually see it as a USP above all else to bring your own data. We will not force any one of our clients to use our proprietary system. There is enough great data repository systems out there, calculations, valuations, all the legal systems. We partner with a lot of them, and we're going to continue building that library of integrations. CRMs, etc. We have got a number of integrations already for the bigger systems, but also for some of the smaller industry ones. We do the same thing with accounting system, with investment management system, etc. So we try to solve that problem by not standing in the way.
Yeah.
So data is most certainly the biggest one, and in some ways, it is actually if I like to say, an old world problem. It's it is the one area that, unless that is in some way in place, we cannot deliver value. You can have an absolutely great looking portal, but if the data is not correct, you shouldn't launch it. So we know that is a challenge that actually sometimes stops us in our track. I'll go all the way to the other end now.
Yep.
And I'll still talk about data, but bi-directional data that is coming in. So let's assume that you got your data sourcing in place, your calculations in place, your portal is looking fantastic, you're driving a client adoption, customer experience is rolling as you should do. Now, the next part of the challenge that we'd like to solve with our Agile framework is the data that's coming in, the data that investors create by using the portal and the app. This is behavioral data. This is pure behavioral data in the sense that it is not a questionnaire. It's not something that an investor tells you, this is what I would do if my portfolio went down by 10%. This is what they actually do without you asking them. So you get to measure the data. And then we try to find patterns there. I mentioned the example of a simple risk profiling example where you ask the user or the investor, what would you do if the portfolio went down? Well, let's just say that I'm pretty adventurous. I don't think I would mind very much. And yet, when the portfolio does go down, you're beginning to see a pattern of using the portal which is inconsistent with that claim. Clearly, they are stressed. Clearly, they are worried about it. They're concerned. Somebody should probably pick up the phone. Somebody might need to tell the portfolio to alert the portfolio manager. Maybe somebody later on can personalize a product for people that think that they are in a particular profile segment, but maybe that they are not, or maybe facilitate a movement between products in a proactive way. So making the most, first of all, collecting, and then making the most of the behavioral data, flowing it through to the rest of the organization. That is the next big challenge. And I think that this is where the future will play out.
Yeah, and this, of course, relates back to another conversation from last week, which you will be very familiar with, where wealth managers and other players in the financial services space see data in a certain way. It's market data, it's data equity pricing, and whatever else. Whereas you're talking about another layer of data, a different kind of data. It's also, if you're not, I suppose, a data scientist or a data professional, quite difficult to think that behavior is data. So how I navigate a website and how I respond to triggers, investment market, and it doesn't naturally think, I don't naturally think of that as data, but you do. Where is the industry in terms of its understanding of this layer of data that is now here, that's not just market data, but is me as a person, me and my behaviors and my reactions to things? Are they there, or are they at the start?
I think that the understanding is still pretty low. It is increasing once again, but it is pretty low. I think that everybody now understands it's a conversation that we have that we don't need to have anymore, that you need to have some kind of analytics in whatever platform you're building. That has been the case for a while. The thing is about understanding the data and tying it up with other systems. Now, last week I talked about two types of a data strategy, about offensive and defensive data. Financial services in general is very good at defending data. Now, this is things like your golden master of financial data. This is the data that you must protect at all costs. The ones that actually drive operations, the ones that flow in from the back office, from stock picking, from portfolio management, etc. And the industry is very good at that. There is a great number of players, of companies that cater for this type of data. What we're talking about here is the offensive data. This is the data that is not exactly throwaway, but it is there to be manipulated. It is there to be massaged around until an insight, a pattern emerges. It's data that might live in different sources. It is data that is emergent, calculated. It's a copy of the data. It's data that is definitely not your golden master, because you can just take it from one source, put it there, combine it with another thing, massage it around. Does a pattern emerge? Is it correct? You test it. You retest it, you train the model, as I say, as data scientists will say, and then you move on as you improve it. And this is the data that allows you to play offense, that allows you to create new products, to take decisions based on the data. The industry, probably because it is so good at the defensive data, confuses the two, and maybe is reluctant to think of data as something that can be manipulated for product design and customer experience reasons, because it's not data that you, as long as you protect it and govern it properly for privacy and regulation, it's the data that it doesn't drive operations in terms of the back office, but it is that will help you improve the business. And because the industry is used to defensive data, I think it doesn't find it so easy to see the value in defensive data in the same way, for example, that e-commerce does, because e-commerce doesn't have that problem. It has different people working with ERPs on the back end and warehousing, which means that the people on the front, the commercial people, have got all the time in the world and a different inclination to think about the offensive data. So part of our heritage as an agency, now we have got experience with e-commerce, and we can bring these ideas. We actually can see what the value is of this offensive data, precisely because we have seen it in use from other sectors.
Interesting. What about the technological infrastructure here? Because you mentioned on the defensive data side, the industry is very familiar with, let's say, portfolio management systems, data feeds, core banking systems, data lakes, whatever they will use to manage and manipulate and store the data sets that they're used to. In the new world where we're talking about behavior and personalization and building products, what is the technology toolkit that firms can use to bring that into their business?
The important thing to say here is that the toolkit exists now. Even people that are, even companies that are in the early stage of the digital transformation I mentioned earlier, even they have got access to all these capabilities. Cloud technology has been around for many years now. It is mature. Costs have dropped dramatically. The product suite has developed in a way that even companies without scores and scores of data scientists like Invest can actually jump into machine learning, etc. So all these terms, all these technologies are actually beginning to get democratized. And in Gartner's hype cycle, which if you remember goes that way, and so something's really hype, then it drops all the way down, and then it kind of reaches what they call the plateau productivity. Now, although AI and machine learning are about to drop down, I think that is mostly a function of how hyped they have been. So we don't put too much attention over there just yet. Analytics is most certainly at that curve at the bottom. It's definitely the curve where the tools to collect the data, the tools to analyze it, the dashboards, the analytics, the insights that you can get from the data are beginning to get both cost-effective and very powerful. And then now beginning to kind of slowly move into what Gartner calls the plateau productivity, where even slow adopters, even early adopters, can start seeing the benefit of this data.
I've been having a few conversations in a particularly famous wealth management, I won't name the name, but it's pretty obvious, particularly famous wealth management industry in Europe on data analytics, and speaking to some of the big firms, still seeing that even where they've got those huge teams and significant budgets to spend on things, they're still only at the start of this journey. So they realize and they're engaged, but they're still early in the journey. And actually, it seems more of a testing thing rather than a live use case. Would you say that's fair?
It is fair.
The industry?
Yeah, absolutely, it is fair. And we did our when we started on our machine learning journey, we did this preparation exercise with a company of data scientists that advised us on how to start, both from a technology and then from a skills, etc. point of view, how to adapt our offering for machine learning. And one thing that became apparently from there early on was that it is a journey, and like digital transformation, data transformation, the journey is also the destination. It doesn't really have an end. But there are significant challenges with this. Now, we like to start with, as always, start small and build up. So we collect the data, build a dashboard and some insights to make most of the data. Now, the machine learning aspect, that's a difficult one. And you have got definite challenges in terms of testability, in terms of making the investment to keep training and improving the models, in terms of the patience that is needed for management until results are found. Now, machine learning has got this issue. It needs a lot of data to get going. So there was a study very recently, actually, that actually saw that 80% of the effort associated with machine learning is about collecting the data, collecting, labeling, aggregating, combining, etc. It's basically the legwork. It's about 5% the sexy stuff of creating the algorithms and then operationalizing the data. But there is a huge amount of legwork. Combine that with the fact that the stability is an issue. So you need experts to actually be able to have transparency in what the algorithm is doing. And finally, add to that the fact that the data availability is highly regulated. GDPR, privacy, security is an issue. Even collecting data from different systems can be a challenge. And you realize that the headwinds for this technology are actually severe. And you have got management who see the value of these things still being a little bit vague. Combining that with the headwinds of how hard it is to implement it. And it is not actually surprising to me that the industry has got trouble implementing it. It also plays in with the fact why e-commerce has been faster to implement it, because the nature of the data is very different. When you have got, for example, an abandoned basket, until the point of transaction at e-commerce, it's almost a fair game. It is anonymized data. You have got aggregate data, high volume, etc. You can draw different conclusions. Completely different in financial services, where you have got low volume, high value data, and that is harder to work with. We will get there. We will get there, and I think that everybody is beginning to understand the value, but not if you go monolithic. Let's start a project and be machine learning enabled in a year's time. That's never going to work. You gotta start small, especially with behavior analytics.
I know there was actually, I confess, having not read the piece, but there was something in the FT or major publications yesterday about the arrival of big tech in wealth management. Again, I can't provide context. I saw the headline, but not the actual detail. As an influencer, do you think that, you've obviously mentioned e-commerce, they've got a different way of thinking. They use data in a different way, but it's maybe different data. That threat a real one to you? For the industry, management space?
Absolutely. And not only that, but I think that it is the most significant driver in the next 10 years. I mean, if we're going to talk about where the industry is headed towards, I think it's going to be shaped by the entrance of big tech in related industries, or even the investment management industry, the wealth management industry. Now, firms, big tech in China have already started going there. I believe that it is Tencent that already has got a wealth management division, and that's doing really well. It's not quite at the level that you and I, or most of the people listening, would understand as wealth management. I think this is more of a mass affluent proposition at the moment. It probably reflects where the population is in China at this time. That's not to say that it's not changing, of course. At the moment, the Western big tech has made lots of headways into transactions, into payments, possibly getting slowly into banking. I can see some insurance movements kind of like definitely coming in. Wealth management has not been the easiest one for big tech to get in there. That's because what I think it was the Economist called it high touch, high tech, which is something that you need. It's essentially two different things that you need to get into this business. You do, obviously big tech from Silicon Valley have got the high tech. They have got the personalization, the data, the behavioral, the analytics, customer experience, brand recognition, and not to mention marketing budgets. But they're not good at high touch. They're not good at the personal service at all. Anybody here who has ever dealt with, say, with Google when it comes to kind of like solving their SEO issues, or even to kind of help them target advertising, they will know that when it comes to jumping away from the digital channels, they're not the easiest bunch to work with, far from it. And it is a similar thing with a lot of the other tech giants. So although the threat is real, and they are very, very strong in the high-tech aspect of things, traditional players in wealth management still have the high touch. We see this as our job to help established players in financial services to bring the high-tech with the high touch that they already have.
This actually, we'll wrap it up shortly. We'll talk a little bit about the future in a moment. You mentioned earlier in terms of product development and working with firms, talking to clients and involving conversation and research among clients as part of the development piece. What is it clients want? So in this high touch world and this high tech world, what do clients actually want from their wealth managers, and where does technology sit in that journey?
Well, transparency, convenience, trust. There is a number of these elements that come in. I will add one more, because I heard that actually yesterday in a podcast, in the Forrester podcast, that actually left a little bit of an impression, which was empathy.
Yeah.
A surprising one in financial services. Now, the podcast was about the impact of the COVID-19 crisis across financial services. The funny thing for me is that there was an analyst in there from banking, one from insurance, and one from wealth management. And all three of them had different challenges. It was interesting to see, to actually benchmark wealth management next to the other types of the other segments in financial services. And sometimes we forget, as we moan as technologists, wealth manager is so behind on the technology, we forget how things could be worse. Banking have got serious issues with digitalization, because a lot of the clients still prefer going into branches. At least in wealth management, you don't have that amount of volume. You still might have got a branch or an office, but you do not have to have an office in every single town. Yeah. Insurance, completely different. It is when people. It's such an extreme industry in terms of customer experience insurance, because it's like you don't want to think of insurance for 99% of the time as a customer, but when you need them at the point of making a claim, you want all the emphasis, all the attention in the world. At that point, digital will not help you. You don't want to be told at that point, please look at our website. You don't want to be told your call is important to us on the phone. You want somebody to speak to right there. It's very extreme. So wealth management actually is has got it a little easier in those terms, in the sense that there isn't, the volumes are smaller. I mean, obviously, high net worth individuals are smaller in number. They tend to be generally more tech savvy because it is a higher socioeconomic background. They tend to have the latest technologies in their disposal. Having access to broadband or a smart device is not really an issue. And at the same time, it's much more. Of course, it does have the same aspect as insurance, where if things go really wrong, you need to talk to somebody. But at the same time, you get the opportunity to have frequent touch points with your clients. With insurance, doesn't really have. You don't really want to think about your car insurance on an ongoing basis. So I'm sorry, I diverged over there, but empathy was an important. We're talking about. Yeah. We're talking about empathy over there, and I will stay on the empathy aspect, because all three analysts from Forest are actually brought it empathy and how financial services need to have empathy, especially at these times. And so I would say that in customer experience, in digital customer experience, that empathy needs to show through. I think that the firm needs to have an understanding of what the customer wants at the point where they want it. And maybe there are clues. Maybe there is clues from the portfolio, if it's going up and down. Maybe there is clues in the behavior, how often they're logging in, whether they're showing signs of stress with the behavior. Maybe there is CRM data, how, maybe there is some report of when was the last time that you met with them, you talked to them, etc., the risk profile, etc. Marry all this together, and then you can bring an understanding, that 360 profile, and then bring that empathy. So the portfolio manager, then the advisor, has got the opportunity to treat them with the empathy, to treat them with, to meet their needs in these pretty challenging times. So, although my usual response to your original question would have been things like transparency, convenience, things that absolutely everybody understands, I think that right now, that empathy might be the most significant part.
Yeah, and also we've seen a few other firms digital empathy as part of their sort of development process as a technology vendor. And again, another interesting topic. But we're running up to the sort of 50 minutes, so we should probably wrap up.
Absolutely.
Final question, actually, just to go on for a couple more minutes, I suppose, is you've talked about, I think, the digital fast lane, so the MVP, the agility, some of the things that you've done recently to adapt to, I suppose, market pressures and market requirements. When you look forward a little bit more into the future, what is the focus for Invest as a business? What are you doing? Where do you think you will be going?
Yeah, well, I think that my take on the industry as a whole, because we would adapt our products to meet the needs of an industry. So we are, customer centric in our own right, not just helping people be customer centric, but we like to be customer centric ourselves. We definitely see a certain amount of consolidation that's going to happen in the industry. I think that is to be expected. We think that wealth managers that actually make the jump from the early stage to evolving will definitely get an edge. I think we're going to see, I will call it a false start. It might not necessarily be, and some people might disagree, with digital first wealth managers. At the time, I think we mostly call them robo advisors, because mostly they touted their ability to manage a portfolio, mass portfolios, with using algorithms. I think that has been pared back quite a bit, but what remains is their digital first customer experience. So I think that there's going to be a re-emergence of these digital first wealth managers. And I think that there's going to be more diverse products, more personalized products. And I think that in response to that, as all these habits, the products, the technology comes of age, as most companies progress in the digital transformation journey, I think that a big jump into this is going to be an expansion into the mass affluent market. And I think that we saw that a little bit with the Asian firms starting from mass affluence, but it might be that that Western firms will do as well. Now, in response to that, we're here to provide technology services. So from our side of the view, our side of the fence, we want to become widely known for helping investment brands to create experiences that would match big tech, to create experiences that will provide, to bring in the high tech and combine it with their own high touch. And I think that companies that do that are going to have a competitive advantage in this new world.
Absolutely, because let's face it, personal experience through humans was the way this market differentiated itself. Talked about its proposition to clients, and moving that into the digital space is obviously going to be key, particularly, I suppose, winning business in the mass affluent and other segments. So, Theo, thank you again for the time. Thank you for giving us an introduction to Invest and some of your story and views on the market. Much appreciated and thought-provoking as ever.
Thank you so much for having me. It has been a pleasure.
And I'm sure we will have you on future webinars. So thank you, Theo. For the audience, thank you for listening. We will no doubt be speaking to you again soon. In fact, I know we have one coming up on the future of the Robo and the value proposition of Robo. So thank you, Theo, for teeing that up for me nicely.
Fantastic.
Okay. Good afternoon, everyone. Thank you for your time. Bye-bye.